Well, everyone, welcome back to the Bank Customer Experience Summit podcast, where we talk all about bank customer experience, technology, trends, and everything in between. I'm Bradley Cooper. I'm the editor of the ATM Marketplace, and I am joined today by Scott Fieber, who's the Chief Strategy Office at Cook Solutions Group, and Ryan Loebs, who is a teller cash recycler expert. As you can probably guess, we're going to be talking about teller cash recyclers today, more commonly known as TCRs, and what's driving the market, where has it been, and where it's going. So great to have you on, Scott and Ryan.
Glad to be here. Thanks, Brad.
Yeah, glad to be here. Thanks.
Excellent. So just to get it right off the bat, so we've seen a resurgence of interest in teller cash recyclers this year in particular. Why do you think that is?
Yeah, it's a good question, Brad. I think technology's come a long ways in the last, probably even 10 years. Ryan could probably touch more on that piece, but it does seem like there's a lot of things happening with regards to just advanced technology, end of life of certain machines that are out there, and then just life cycle management for customers too. And so from our perspective, we see now is a really good time to kind of pause and rethink that strategy, just because there's been so much that's changed since typically they probably looked into TCRs before they first bought into them, 5-10 years ago.
Yeah, we're there's this kind of concept out there considered the post-COVID environment, right? The world after COVID, and when we think about what that is in banking, there's some significant changes there. There's been pressure on salaries. There's been more cash in circulation. There's more, I think, from the bank's perspective, more than ever, focus on personal touch, I think, and being in touch with their customers. So I think some additional things to what Scott mentioned, this kind of post-COVID world, where you have pressure on salaries and more cash in circulation, you're seeing this renewed interest, Brad, for TCRs. That's definitely part of what's driving this forward, especially now.
Excellent. That's a really great point. So just to get into it a little further, how has TCR technology changed in the last 10 years?
Well, pretty significantly, to be honest with you. Over the past 10 years, we've gone from what was seen as the current technology in things like rolled storage, and capacity was a little bit lower, which was the technology at the time, and some other things as far as kind of interfacing with the device from the teller perspective, was kind of the result was there could be some challenges when things went wrong, for example, either in the software or the hardware. And today, it's really kind of addressing many of these key challenges of the past with new technology. Stacking cassettes are the standard. We've deployed things like auditing, self-audit for the device, higher speed, higher capacity. And frankly speaking, those are really what the TCR devices of today really need to be, as opposed to 10 years ago where they might not have.
I think it's interesting too, like on that point, Brad, like if you go back even teller cash dispensers before we even did recycling, I mean, everyone was just teller drawers, right? You had your cash drawer, the teller would do their thing, super inefficient and slow, especially end of day practices to balance and sell stuff back to the vault, do whatever you need to do. The cash dispensers came out just helping with just the speed, no need to count the cash, that type of thing. And then the recycling came like Brian's talking about, but again, that was a long time ago. Since then, it's shocking to me, again, to Brian's point, like how many features have come along, but then just how much more efficient you can even get from even the first round of cash recyclers. You'd think, like, once you get to the recycling spot, like, man, you've kind of got as efficient as you possibly can. But the reality is you haven't. Now with these newer pieces here, it's pretty crazy, especially the self-audit like Ryan's talking about, being able to just audit the cash, do it quicker, get hands off of cash and less responsibility on the staff. It's pretty mind-boggling when we sit down with customers and look through how much time it takes them to audit and finish end-of-day practices with their current recycler compared to a new machine. I mean, the savings is incredible, and we're actually happy to, if anyone's interested in that, to sit down and actually put a stopwatch to it and then put some actual soft costs against that and develop an ROI, because it is shocking. And again, to me, even who's done it several times, to see what that savings can look like for an institution.
Right. All great points. So, shifting gears a little bit, let's say your financial institution, you already have a TCR installed. Why should you relook at your strategy with the cash and the brands and possibly different uses of TCRs if you already have those TCRs installed?
Yeah, that's a maybe, Scott. I'll grab this one, and I'm sure you can add too. But as far as upgrading or moving forward with new technology, kind of key in a little bit, and the environment of the branch is drastically changed. You may not have more than one or two tellers nowadays. And what does that mean? Well, a lot of that throughput has to go through one or two tellers, where in the past you may have had three or four, or even well beyond that. So in the past you had more of a distributed network of devices and tellers to be able to manage kind of the peaks and valleys more efficiently. And today, a lot of branches don't have that luxury. So they need kind of the TCR of today, which is higher speed, higher capacity, can function as a vault, can audit itself, has the capability to move money, between the back of the house and the front of the house as far as bulk movements and loading, stuff like that. So, Scott, I don't know if you have anything to add there, but.
No, I think the vault piece is an interesting one, because I think early on, because of capacity concerns, banks and credit unions still had to have a vault because there wasn't enough capacity to handle the cash in and cash out for a full day, for example. Now the capacity has gone up. Again, the need for an additional vault is kind of gone. But I would say on the flip side too, you're also seeing more and more of these micro or express branches, non-traditional iconic branches where, again, maybe you call it like a loan production office even, right? You don't even have a traditional teller line, but now they make single-use sit-down units that you could put underneath your office drawer as a lender and have access to be able to dispense cash and recycle cash much more easily too. So I think the use cases are pretty exciting now, where it's not just this typical massive stand-up machine that you want to share between multiple tellers and like that traditional teller row setup. Now, again, it can be a central vault for the branch. It can be a commercial VIP zone only, maybe in tandem with ITMs for your retail transactions, to where now it's much more of a sit down, VIP type feel for your commercial accounts. They're doing large cash deposits or withdrawals, and their personal banker or member service rep, whoever it might be, can handle that right there at their desk with a smaller cash recycler underneath their feet.
Yeah, there's one last thing, Brad, is the software environment. So one thing that we've seen, and Scott, you may have seen this as well, is that the simplicity and kind of the standardization across software platforms that enable TCRs, middleware and direct integrations, have really gotten much more stable and consistent with performance and expectations and so on. And that the impact there is the experience for the teller and the member has gotten so much better as far as the software interfaces as well.
Mm-hmm.
Right. That's a great point. Now, let's talk a little bit about price, though. So, because the advances of these technologies also seem to have made the device more expensive. So, what type of ROI can a financial institution expect when they deploy these more advanced TCRs?
Yeah, I'll take that one, Ryan. I think it's, you would think, right, Brad? You would think with all this advanced technology, it would be way more expensive. The reality is it's actually gotten cheaper, especially if you're considering some of these smaller units. Like there's literally the half the price of a traditional unit because it's single use, right? And so the capacity's there. I mean, all that stuff has gone down. But I mean, just again, to quote the post-COVID world, right? There's been some interesting pieces there on the manufacturing side where, again, I'm not going to say all vendors, and again, CSU only works with a handful of the kind of the more elite on that end. But from what our perspective is that cost has gone down. And what I'm shocked to find out sometimes is customers are going about doing repeat orders just because they've been with XYZ customer for so long. They've been buying this TCR. They're just repeating that order, and they're spending sometimes $10,000, $15,000 more than they could be with a more newer model and a different manufacturer. So it's definitely worth a look if you haven't price checked your TCRs in a while, or if you haven't just stopped back and like looked at that overall strategy, because again, there's been so much from an advancement perspective that's happened there. And then I think you take that savings of just the purchase and the capital expense on top of what we already talked about with the ROI of just the savings from the newer technology. I mean, I don't want to say it's a slam dunk, but like it doesn't get much more simple than that, right? Because there is so much savings on both ends there, on the operational side and the capital side. It makes a ton of sense.
Yeah, I fully agree, Scott. Prices certainly haven't gone up. And the other thing, a little bit to touch on, is kind of economy of scale has impacted this too. Is that 10 years ago or so, TCR wasn't as popular in the U.S. It was more popular in the Eurozone and in some of the Asian countries as well. And now with the popularity of the U.S., the devices in the U.S., is that now we're able to produce more consistently, and that does impact the price of the device. And kind of reflecting on what Scott said about ROI is easy as ever. I mean, with cost of labor, going up, and the number of banknotes coming into the branch going up, and the pressures there, and wanting to maintain that great customer experience. So ROI, price of the devices, are better, as good as they've ever been.
Yeah, an interesting piece on that, Brad, too. Like since COVID, just kind of tracking cash usage in branches is interesting. Like there's a lot of third-party reviews out there. Again, believe them or not, right? But it does seem like the number of transactions is down significantly across the board for branches, but the quantity and the volume of cash is up, right? So people are coming into the branches doing larger withdrawals and larger deposits, but they're doing fewer of them, which is interesting, like just trend and behavior, right? But I think that just gives, again, more of a need to have a recycler that can keep up with that type of a demand. Because again, that's always been one of the mathematical equations you got to figure out in putting a TCR in your branches. Am I going to have enough cash in as much as cash is coming out so the machines don't run out of cash or get too full, right? And so with this, I think that large capacity, being able to split cassettes, being able to have optional things like that allow you to have some flexibility. Again, older technology doesn't allow you to have, really kind of answers some of that changing consumer demand that we're seeing.
Right. All great points. So given that your discussion about ROI and the fact that there's some end of life announcements on many of the models deployed today, how should banks plan to replace those units? Because that's a big issue, being able to successfully plan to get rid of the old one and bring in a new one.
Yeah, I would start with getting a plan, right? Like I said, I think we've seen a lot of institutions just repeating the action of like, hey, we've got TCRs. This was the brand. It's now end of life. Let's just buy a new one, instead of stopping and seeing what's out there. Because again, there's several really good manufacturers out there in the marketplace. But again, several of them, or at least a couple of them, definitely separate themselves from anybody else. And I think where we kind of sit in at CSG is we're kind of that vendor agnostic consultant there to help you go through that process, where we can walk through and say, hey, what are your needs? What are your cash capacities? What are you trying to solve? How are you using it? How could you be using it? Some of those things. So I would say, to answer your question quickly, where to start is let's start with the conversation versus just going and doing what you've always done. From there, we can get in and work with figuring out that ROI and just seeing if it pencils out. Like there's no commitment in spending just a little bit of time seeing what could be if we make this choice to change. And then from there, the numbers will tell you everything you need to know, right? Do you want to do something? Yes or no? And here's the answer to how that is going to impact your institution.
Yeah, I mean, I couldn't agree more. I mean, it starts with a plan. Oftentimes the service fees for existing devices that might be near or end of life, or kind of coming to that, fully depreciated cycle, those service costs can creep up and not really be, really maybe paid attention to over the course of a couple of years, but you realize, wow, we're paying double now to keep these going. So yeah, just a tidbit to add on top of there. And like I said, we both said is that ROI, even if you have TCR now, and you do one kind of taking into account the new devices and technology, you will be amazed on what you can probably afford as far as technology.
Yeah, really great point. So I want to dive into specifically, how does Cook Solutions Group specifically help with all of the above that we've discussed today?
Yeah, like I mentioned, I think we're definitely there to help with that exploratory call, right? Whether we sit down with your executive team and we talk through all those potential impacts, because it is going to impact multiple departments within your organization, especially if we're looking at doing things a little bit differently than how you have it. Again, depending on where you're at. If you don't even have a TCR today at all, there's going to be a different uplift there than if you currently have something and you're just looking at just refining that process. Either way it is, CSG is there to help you. And like Ryan mentioned, there's also just a number of different softwares out there that you got to kind of contemplate. How does that work with your core? What can we gain or lose by switching in certain cases there? And the next piece is, again, we're there to help you build that ROI. So we're there to help put a stopwatch on how long it takes tellers to do certain things. How long does it take to do transactions? What are the savings here? What other tasks are needing to take place because you have older technology? And then kind of put that entire package together. And then obviously at the end of the day, sure, if you'd like to, we're more than happy to sell the equipment, install the equipment, and then take care of the equipment going forward from there too. So we really can kind of be that one-stop shop for you and taking care of it from A to Z. But again, we want to make sure we're doing what's best for our customer long-term. And again, it's not a sales approach from that perspective where we're really there to help you make a right, educated decision. And then from there, you got all the pieces in place to figure out and make a choice for yourself. One other piece I'll just kind of add to it, is we've got people like Ryan where we bring in other industry experts that have been doing this for a very long time to help out with that if needed, right? Because I think in being in this industry, we know a lot of organizations, we know a lot of people. And so it's sometimes invaluable to say, hey, XYZ Credit Union just did this deployment with your core system with this manufacturer. Let's have you talk to them and see what they thought, what their experience was. And sometimes that kind of goes unnoticed, but that's something where within CSG's footprint, we have, again, plethora of different customers of different sizes with different use cases. We try to find that matching peer in part of that discovery conversation so that, again, we kind of don't just take our word for it kind of a thing, right? Talk to experts like Ryan, talk to your peers who've done it and make that full, again, educated decision.
Right. All great points. I think that's an excellent place to end it here. This was a really great conversation, and I want to thank Scott and Ryan for joining us and sharing with us a little bit about TCRs. Thank you so much.